The Fibonacci extension tool is one of the tools you can use for your take profit target. It helps you know the point that the market is going to reach after you enter the market so that you collect profit and exit the market. In this video, I'll be discussing in detail how to use the Fibonacci extension tool, the parameters you should be looking out for, and how to properly draw it on your chart, and how to incorporate this very tool in your already existing strategy. All of this in this very video. So watch this video all the way to the very end. Consider supporting this channel by leaving a like for this video, subscribe right now, and turn on the bell notification for more forex videos like this one. Also check the channel for all that forex content. USDJPY 1-day chart, a detailed example of how to use this very tool. First of all, the Fibonacci extension tool can be used in only two scenarios: if the market is coming back down or if the market is moving all the way to the upside. And I'll be doing a detailed example on the possible situation you can see on a downtrend and also in an uptrend. So let's say, for example, market is moving upward. The main goal of the Fibonacci extension tool is for you to know the exact point to take profit or possible take profit area. Let's say, for example, market move upward and then retracement. You want to enter at the end of retracement so that you catch the next impulse, okay? And you know the possible area where this impulse is going to end in the market. That is the main thing about the Fibonacci extension tool. So when you know that maybe this area the market is going to have another retracement, or this very point we're going to see another retracement in the market, it helps you set your profit target at that very area or within that zone. That is the main thing, the main aim of the Fibonacci extension tool. So this is very important in a downtrend and also in an uptrend. In this very case, in an uptrend, let's say, for example, market is moving back to the downside. So market move down, impulse retracement, and then market is moving downward. So the main thing here is, if market is moving down and then retrace, we want to enter at the end of retracement, because at the end of retracement is the beginning of the next impulse, so that we can enter and move the market with the next impulse and know the possible area this impulse is going to end for the next retracement to come into the market. This is very important. So when you know the possible area the market is going to end the impulse, then you set your take profit target within that very zone, because from that area or within that zone, market is going to have retracement, also giving you another opportunity to enter into the market again. So this is the core basics about the Fibonacci extension tool. It helps you know the area or possible zone for profit collection in the market. The next thing is, how do you pick this tool and how can you draw it on your chart? It's very simple. All you need to do is to come right here to the Fib level. We have the Fib retracement. Right here is the trend-based Fib extension. So you just left click by picking it, and how you draw it on your chart to properly know where that level of taking profit will be is, for an uptrend, you draw from swing low to swing high and back to swing low. Then for a downtrend, you draw from swing high to swing low and back to swing high. I repeat again. For an uptrend, you draw from swing low and to swing high and back to swing low. That is where you started the drawing. And if you want to draw for a downtrend, you do the same, but in this very case, you draw from swing high to swing low and back to swing high. This is how you draw it, and you are drawing it on the last impulse. Let's say, for example, in this very case, market move with this impulsive move to the upside, and then retracement have ended already, and this very retracement end around this very area, about to move the market to the upside by the bulls. And what that means is, at the end of every retracement, is the beginning of the next impulsive move. So what that means is from this very point, market is going to move upward. So we want to take this very tool to show us possible take profit target. So if you look at this very tool, which is the Fib extension, you discover that the first profit target, if you enter this trade around this very area or this very point, the first profit target is this very area, and then the second profit target is this very area if the market keep moving upward, and the next profit, which is the third profit target, is this very point, and the fourth profit target is this very area. Now if you look at it, they all have numbers. So the first profit target is the 1.618 level at this very point. The second profit target is the 2.618. The third profit target is the 3.618, and the fourth profit target is the 4.236. Okay, these are the different targets of the Fib extension tool, and this is very important. Now one thing very important here is that for me, I consider the first target very important, because as you all know, most time the market will not keep going all the way to the upside. So I consider the first Fib extension level very important if I am using this very tool for my take profit target scenario. So in this very case, if I enter the market around this very point, let's say for example, and market begin to move upward, I'm going to use this very area as my first profit target, because this is where the Fib extension shows the 1.618 level as the first profit target. That means within this very zone, market is going to retrace and give me another opportunity to enter again for the next impulsive move all the way to the upside. And this is very, very simple. So the best way to draw this on your chart is by coming back to this very point. You pick the tool and you draw from swing low to swing high and back to swing low in an uptrend. And for a downtrending market, you draw the opposite. That is, you draw from swing high, that is on the recent impulsive move, to swing low and back to swing high. This is very, very simple. So in this case, you can see that the profit target is at this very point. This is the 1.618 level and the 2.618 level, which is the second profit target, and the 3.618, which is the third profit target, and the 4.236 right at this point, which is the fourth profit target. So these are the important targets for the Fib extension level that you can use for setting your take profit when you enter a position in the market. Now let me do it practically on the chart. I am using the USDJPY chart. Let's say for example, this very market is moving upward. As you can see, markets move from this very area all the way to the upside and then retracement. So if you use the Fib retracement, you discover that this very retracement have ended and the next impulsive move is going to come into the market. So what we need to do is to use our Fib extension level to know where this very take profit target is going to be if we enter this trade at this very point and our stop loss is at this very area. Remember, for an uptrend, you draw your Fib extension from swing low to swing high and back to swing low. So you go right here and pick the trend based Fib extension and you draw from this very area, swing low to swing high and back to swing low at this very point. So if you look at it right here, you discover that the first take profit target is at this very point of 166.24 on the USDJPY chart. What that means is, let's say for example, I enter a trade at this very point and then my stop loss is at this very area. My take profit target from the Fib extension is at this very point. So this is where I am going to set my take profit target, because this is the level that the Fib extension shows that should be the possible take profit, because when market begin to move upward, this area is a very important point before the market will begin to move downward again. And this is one crucial thing you must have to understand when you are using Fib extension level for your take profit target. The next example is for a downtrend. Let's say, for example, market is moving downward from this point of resistance all the way to the downside, and then there is a retracement before the next impulse to the downside. We want to know where this very impulse is going to end so that we set our take profit target at that very level. So what you need to do is to pick your trend based fib extension and draw it on this very impulsive move to know where the next impulsive move is going to end so that you set your take profit target at that very point. So what you need to do is to go right here and pick your trend based fib extension, and you draw from swing high to swing low and back to swing high at this very point. And let's say, for example, you enter the market at this very point or at this very area within this very zone, and you set your stop loss to this very point, and your take profit target from the fib extension 2 is at this very point right here. This is your first take profit target, while your second take profit target is at this very point, which is the 2.618 level right at this very point. Like I said, don't always go to the second take profit target. The first take profit target is always okay for you. Most time the market obey and respect the first take profit target level if you are using the Fibonacci extension tool for your take profit target collection. And this is very, very important. So this is how you draw it in a downtrend. I will repeat again so that you better know how it works. All you need to do is to notice the impulse and then retracement have ended. Market is beginning to move downward for the next impulse. You draw from the swing high, which is the resistance, to the swing low, which is the support, and back to swing high at this very point. And then it's going to give you this very area as your first take profit target level. That means you set your take profit target at this very point, your entry is at this very area, and your stop loss possibly is at this very point, and you allow your trade to run. This is how you draw your fib extension level in a downtrend. And the last example here is for an uptrend again. Let's say, for example, if you notice this very market move all the way from here upward, retracement, and then continuation to the upside. What you need to do is to use your trend based fib extension to know the possible area of profit collection or profit target. Okay, so you draw from this very point, swing low to swing high and back to swing low in a uptrend. So you pick your fib extension tool from this very point by left clicking, and then you draw from swing low to swing high, that is support to resistance, and back to swing low, which is the support level right at this very point. When you do that, it's going to give you the possible level of profit collection. If you notice, this very point is the first take profit level area shown by the fib extension tool right at this point. So possibly you should enter the market around this very area or this very zone. Okay, within this very zone is your entry, and your stop loss should be within this very area right at this point, while your take profit target is at this very point. Now, for these three examples, you discover that the market will always, most time, let's say 80 to 85% of the time, it will always hit the first take profit level shown by the fib extension tool. So this is very important, and this is how you can use the Fibonacci extension tool and incorporate it into your strategy when it comes to profit collection. So this is very important. This is how you draw it, and this is how it works on your chart. And this very methodology work whether you're trading stock or you're trading forex or you're trading crypto, any market. As far as technical analysis is concerned, this very methodology is the same, and it works the same in any market as far as technical analysis is concerned. This is a very important way to collect profits and know the exact point to take profit in the market when you are in a position, be it in a downtrend or in an uptrend, using the fib extension tool. If you like content like this, consider supporting this channel by leaving a like for this video, subscribe right now, and turn on the bell notification for more forex videos like this one. also check the channel for other forex content, and join our Telegram channel with a link in the description of this video and also in the pinned comment. The 5 golden rules that help me become a better trader, check the video right here. It's going to help you, and when you follow these rules, your trading methodology and your result is going to move all the way to the next level. And support and resistance is a very important concept in trading, so know how to use it, unlearn and relearn the most important approach to use support and resistance in your trading. Check this video out, it's going to help you as well. Thanks for supporting this channel.